Welcome. Good morning to another video recap of a trade on the E-mini S&P for a day trader's journey.com. This morning here we have a situation where price has broken below its 5-minute opening range here. This blue shaded area is the 5-minute opening range. And we have this trend line that I drew onto the downside, this blue dashed trend line. And I drew it based off these two highs here, this swing high here and this swing high here. And let me show you here, let me highlight my pointer here. So you can see here these two swing highs. I drew this and price bounced off of this swing, this trend line down right here. I didn't take this trade here because again it wasn't a clear second entry. But it was a nice bounce you can see off of the trend line that was drawn ahead of time based off those two previous swing highs. And then here's a trade with this big red arrow that I'm in right now. You can see that I'm in this trade. I'm waiting for my second target to get hit. And we're getting close to there, but it's starting to move back up here. So I might get, my trailing stop might hit me and take me out. So basically, move my stop down a little bit here. What I want to show here is this trade that I did take is a second entry, but not a clear second entry short. And I'm going to explain why. First of all, again, I was proving that we are in a downtrend, immediate downtrend, because price broke below the 5-minute opening range. You can see the little trend line here I drew, and you can see that price broke above the trend line that I drew, but hit a little resistance here at the bottom of the opening range. And you see this little bar here. You can barely see it. Let me try to enlarge it. And right about here you can see this little doji bar. Let me circle it for you here. And this red circle, this little doji bar here. Usually I like to take a short off of a signal bar that is a bear signal bar, and this is a doji signal bar which shows indecision, so it can go either way. But you know, the next bar would be considered the entry bar, and you see how big bearish bar this is. And I didn't want to take a short below this entry bar because we're too far away from good stop placement above the previous swing high. So what I did is the price moved back up. You can see here. Let's see here. Looks like my target might have been filled. That's what that noise would have been. But anyway, so we have a good downtrend. Like I said, we have this signal bar being a doji bar, which you could have taken a short below it, but I didn't because it wasn't a full bear bar, a red bar. So after this strong entry bar, what I did was as price moved back up here, I took a short here that was about 2 points below the high of this swing high to get a good stop placement. Place my stop 1 tick above this swing high, and that put me short around 62.75, 20.62.75 on the E-mini S&P. So I got filled here around this red arrow on this bar here. So let me erase this circle I just put there. So also the reason I was getting in here is because the moving averages were bearish, the 21 below the 50, just barely here. And you can kind of draw, enlarge it a little bit for you. Hopefully this makes it a little easier to see. So once I got in the trade, it did go against me a little bit, but not that much, and then went back down because I believe the trend was moving downward. And another reason why is because of the market internals. Here I have the tick, and here I have the advanced decliners. So at the time I got in around this red bar, red arrow pointing down to this bar here. It's about 7:04 to 7:05 a.m. You can see here, I'm not sure if you can see the y and x axis on the tick chart. We were below zero, ticks were below zero, average of ticks are below zero, and on the advanced decliners down here on the bottom right of the screen, you can see that we were trending downward, all red bars here, no green bars in sight. So another reason why I felt comfortable taking the short here. So I had support, which is from the market internals, and now we go back to this chart here, and you can see that I was taken out of this trade on my trailing stop. So we had a big spike to the upside and hit my trailing stop, which is fine. It came very close to my target, but didn't hit it. But that's okay. There's always another trade. So let's give you an example of a second entry that wasn't always super clear, following the rules. Because again, my rule is I'd like to take shorts off of a signal bar that is a bearish signal bar. If I'm taking a short, I want my signal bar to be bullish bar or a green bar if I'm taking longs. And this one was in between, being a doji bar. And just so you can see this entry again, making sure it's clear. The reason why this is traded as a second entry is off the swing low here. We count the first pullback, and then break of the pullback is right here, which is called the first entry. And it broke below the low of this bar here. So this is considered a first entry, and then it pulled back again for a second time of pulling back, and this would be considered the second entry, a break below this bar. This will be the signal bar, and this will be the entry bar on a second entry. And so there's your second entry. And again, I just explained why I didn't jump in right after the break of this bar, because this signal bar wasn't bearish. And so that's it for now. Right now we're in a downtrend, and you can see right now price is moving fast to the downside. And you can see the tick is making new lows on the tick. And the advanced decliner is still trending downward. Look at that, all red bars, letting you know that the momentum is to the downside. All right, pausing for now.